Alright, welcome back. In this video, we're going to be talking about the top 3 stocks to buy July 2022. Now, I'm not going to give you any names from left field or some small caps that have 10x potential over the next 3 months. No, I'm going to give you the best of the best bulletproof names. Okay, spoiler alert, they are all FANG stocks, they're all mega cap companies, but there's a reason why they're the best of the best. They're bulletproof, you have no worries, and just keep adding them to your portfolio, dollar cost average, even through this tumultuous time where there's so much uncertainty with macroeconomics, geopolitical issues, inflation fears, recession fears. These are the best of the best. So without further ado, the number 1 name we're going to be talking about is Alphabet stock. I like to call it Google stock. Now trading at a market cap of $1.44 trillion, a PE ratio according to Google of 20. And all things considered, this stock is actually relatively cheap. And just, okay, before we even get to these stocks, if we're not going to have a recession, these are actually some pretty cheap stocks, all things considered, as this was a $2 trillion stock at the beginning of the year. When this stock was around $3,000, then it was about a $3 trillion market cap, and we see that it's been slashed 25% ever since. But if we do get a recession, there's a very good chance that this continues going lower. So that's what I mean, dollar cost average, because it's very, very, very impossible to time the market. We're talking about the company that's the advertising king across the internet, along with Meta platforms or Facebook, but really Google takes the cake for me. They have an absolutely bulletproof balance sheet with total assets at the end of 2021 at $359 billion relative to their total liabilities of $107 billion. Total cash of $139 billion, so well strapped for cash. Revenues growing very nicely, so year over year with the 3 months ended March 31st, so the first quarter in the 2021, they had $55 billion in revenues, and in 2022, $68 billion. Again, 2022 is going to be very rough for every company, so if we see some not so good numbers in the upcoming earnings call, again, all these companies I'm going to be mentioning are going to be reporting earnings in the next upcoming few weeks, and they're going to have a strong moat, pricing power regardless of what's going to happen, and they're going to come out of the other side no problem. Again, these companies aren't going to be going anywhere anytime soon. The company's making money hand over fist, especially in Google search. They also own YouTube, as we all know. That's how you're watching me right now. They also have Google advertising, Google services, Google Cloud, other bets, and so on. All right, next up we have the behemoth in Microsoft, a market cap of $1.94 trillion. At the beginning of the year, we were trading near $350. That was a 52-week high, and now we're down 22% on one of the biggest companies in the world. They are the enterprise software king. Think of Office 365, Microsoft Teams, their cloud computing, and Microsoft Azure. And not to mention, they're also going to be dabbling into gaming with their not so little acquisition of Activision Blizzard for just under $69 billion, which hasn't gone through yet. This company is the absolute pristine company of the stock market. I know they're a little bit smaller than Apple, a little bit by a few $1 billion here or there, but again, well off their all-time high. Again, you don't know where the bottom is, but they are an absolute bulletproof company. And as a software company, especially with enterprise software, overall, they're pretty resilient when it comes to inflation. They're not going to be feeling the heat as much as other companies. They're also going to be reporting earnings. They're also going to be reporting earnings just like Alphabet very shortly. And this is their first quarter earnings. They just smashed on the top and the bottom lines. I wouldn't be surprised if they actually come up with some pretty good numbers this upcoming quarter. But again, everything's going to be really murky, so who knows what's going to happen. And when they came out with their quarter 1 earnings, they beat on their top and their bottom line. So again, very resilient. We'll have to see what happens when quarter 2 comes, but I wouldn't be surprised if they actually beat expectations, especially as things have been pretty murky and consumer sentiment and everyone's pretty down on the stock market overall. And they're down pretty big, so I wouldn't be surprised if they beat. Just like Alphabet stock, you're going to want a dollar cost average. We don't know where the bottom is, even if they record amazing earnings in this upcoming second quarter. Sentiment, macroeconomics, the stock market could just sell off just because it just wants to. There's no logic when it comes to the market. So again, you want a dollar cost average, these bulletproof companies, long term if you have the time to stomach all the volatility. And lastly, of course, we have Tesla stock, my favorite company out there. Now, compared to the other two, this one is trading the richest. Disclaimer, Tesla stock is overvalued the same way that Amazon also traded at a premium for the past decade, but all they did was grow and grow and grow into their valuation. And again, now Amazon is down as every stock is, but Tesla stock could very well do the exact same thing. It may not, but again, dollar cost average the same way you would with any other stock. No one knows where the bottom is. If we look year to date, we started off the year at about $1,200, falling all the way down to about $750. We had that rip rally after that first rate hike in the middle of March until the end of the month. And then when we hit April, we hit about $1,150. And since then, we've fallen again 40%. So we are down 43% year to date. But again, most of those losses that we've seen have been as recent as the beginning of April. So April, May, June, 3 months, down 40%. Very painful, very volatile. But again, that's the price you have to pay for outsized gains long term. And when it comes to volatility, it isn't just the downside. As we saw back in March, things can also be volatile toward the upside, and people can't believe the rallies that we see. Currently at a market cap of $706 billion, when we're above $1,000 on Tesla, we're just above that $1 trillion mark. This past weekend, they came out with their delivery numbers and snapped a 2-year streak of quarter-over-quarter growth. However, they're well above their year-over-year growth, as they delivered 254,695 cars worldwide in the 3 months to June. A lot of people are going to be losing their minds thinking that Tesla has done a bad job. However, considering the headwinds, specifically with the COVID-related shutdown in its factory in Shanghai and the COVID zero policy in China, they actually did pretty well, all things considered. And once they start to really ramp up production, Giga Berlin, Giga Texas, and again, Giga Shanghai, just wait for the numbers to really come out at that point. Again, a lot of really bad news out there, but again, Cybertruck, the Optimus robot, self-driving, robo-taxis, just wait for Tesla. It's just biding its time. And then again, I can see the stock really exploding, but right now there's just so much fear. We may go down another 10, 20, 30, 40, 50%. We don't know, but long term, my absolute favorite, this is going to be a really good one. And not to mention, in the first quarter, they smashed earnings on the top and the bottom lines, beating both of them, as well as recording record automotive margins of 32.9%. So looking at the technicals, first off with Alphabet stock, again, it's been pretty ugly. We did reach an all-time high back in February after we got the news of their upcoming stock split, which is coming up very shortly in about a couple of weeks. Ever since then, it's been completely downhill. We're well below that 200 simple moving day average. We've been trading pretty sideways ever since, let's say, the end of April. There's a clear supply zone around 2350, another one at about 2500 as overhead resistance. And we have a pretty strong support area of about 2100. And not to mention, we made just a little bit of an uptrend ever since these lows over here. But again, nothing is clear cut and it's only been intact for about a month or so. Taking a look at Microsoft, this one peaking at the end of November of 2021, been all downhill like the rest of the market. Well below that 200 simple moving day average. Again, trading pretty sideways ever since the middle of May, let's say, hitting a bottom in the middle of June at about 240. We have a clear resistance and supply zone around 270 and overhead resistance clearly at about $300 to $290. A clear zone of supply at about 270. So if we do want to see any kind of recovery, we would have to break that point, and the next area at about 290. And lastly, Tesla, of course, this one well below its 200 simple moving day average, hitting its peak back at the beginning of November. I remember it just ramped up in price in the mid 700s all the way up to about 1210, and then again super volatile, going as low as 700, right back up to about 1150. And now at the bottom part of the trend line, if we zoom out, this trend line has been intact ever since the end of 2020. If we do break the 600, 630 area, it could get really ugly for Tesla. The next area for that could be around 550. So we'll have to see if this trend line can hold. We'll just have to see what comes of the next quarter's earnings. Otherwise, that is the end of my video. Thank you very much for watching. As always, let me know in the comments below, what do you think of the 3 stock picks for July of 2022. As always, share, subscribe, like the video, and check out my description below for links to my Instagram, my Twitter, and my TikTok. I will see you guys in my next video.